Welcome to this episode of Pesa Talk. Today we are going to talk about a topic that I am very passionate about. It's my area of expertise. It is the industry that employs me. We are going to talk about collective investment schemes. So what we are going to do with this topic today is we are going to give you a beginner's guide, what you need to know about CISs. So collective investment schemes. For lack of a better word, that is what you guys refer to as unit trusts. So unit trusts are part of collective investment schemes. So what you look at here is people pulling together funds for them to be able to enjoy the economies of scale of pulling together funds. So you pull together funds and give them to a licensed fund manager. The fund manager then goes ahead and invests these funds on your behalfs into asset classes, different asset classes, and then based on how much you've put in, what you then hold are units. So you have an asset, but you have units into those assets. So if you have 100,000, you're looking at 100 units, depending on how much each unit is. So this industry currently in Uganda, we stand as of December 31st, 2024, we stand at 3.8 trillion Ugandan shillings. The product has been taken up massively by organizations, individuals, NGOs, corporations. And if you look at the amount of funded CIS accounts, as of the data that was published by the CMA, you're looking at about 113,000, give or take, funded CIS accounts. So in terms of AUM, we're at 3.8 trillion, that is assets under management. In terms of accounts, we are at 113,000 funded accounts. And again, when you look at in terms of number of players on the market for the collective investment schemes, we have currently eight licensed fund managers in Uganda. So you need to do your research, you need to do your due diligence just to try and understand which of the fund manager appeals to you. In terms of the different CIS accounts, again, as of close of 2024, we had about 20 licensed unit trust schemes on the market. And Britam Asset Managers is one of those that are currently offering the services of unit trusts in Uganda. So someone would be asking, what exactly are these unit trusts and why is there a big uptake in terms of these products currently in Uganda? So if you look at the different fund managers and the kind of unit trusts that they are offering, so you do your due diligence as a person and you're able to ensure that the fund manager you're investing with is first of all licensed. That fund manager meets your major objectives as a person in terms of what you're looking at, in terms of governance, and then where the majorities of these funds are invested. Of course, most of us as fund managers invest in the government securities. We do a bit of cash and call deposits. So that is where the monies are. So what are some of the myths around unit trusts? So first of all, Ugandans, unit trusts are not a get rich quick scheme where you think you're going to get 1 million, you put in, and at the end of the year, it has given you 500,000. No. That's not how it works. So the returns with unit trusts require you to be patient. They take a bit of time because then your money gets to be invested and whatever is invested comes back to you, and that money is also still invested. The other myth that people have around unit trusts is that the prices are fixed. So that is not true. Most of the unit trusts on the market currently have their prices going up and down. So the prices on unit trusts, because they invest into different markets, are prices what you call variable pricing. So every day the fund manager issues what the price is for a unit, and at the end of the day you're able to invest based off their historical performance. So, and also as a disclaimer, historical performance doesn't guarantee future performance. So part of the myths that Ugandans have again is they think that unit trust prices are fixed, which is not true. And then also the other thing is that fund managers are regulated, but you still need to do your homework as an investor. You need to understand which fund manager works for you. So how do you then start investing? How can you start investing? Like I said, we have 8 licensed fund managers currently in Uganda, and Britam Asset Managers is one of those companies that are licensed to sell unit trusts. So you pick your fund manager who is running a unit trust scheme, then you understand the type of fund you're going to invest in. We have different funds that speak to different needs: the money market fund, the umbrella fund, the equity fund, the balanced fund. Each of these have different risk appetites that they are trying to welcome. The other is that you need to understand the track record or how the funds have been performing, and you also need to have a framework in terms of how you'll be tracking this performance going forward. So there needs to be accountability from your fund manager that you intend to invest with. You also need to understand how you can pick back your money in an event that you need it. So you need to track how you can pick your money. So part of the things you need to make consideration for when you choose to invest into unit trust: one, you need to look at the fund manager's experience and past performance. Whereas it is good for new fund managers to come on the market, it's also important for you to understand the people behind that fund manager in terms of the backing, financial backing, the corporate structure and organizational structure. So you're looking at the fund manager experience, you're looking at the fund manager professionalism. That should be a way for you to invest. You should also consider the expected returns. So you compare inflation to how much you're going to get when you invest into a unit trust. So if you want to start, part of the consideration you need to make is that you need to compare the expected returns against the current inflation, and also compare it to the other assets or the other investment vehicles on the market, like treasury bills and bonds. So you also look at your investment horizon. If you want to invest, most unit trusts are open-ended, meaning you can pick your money as and when you want, but it's also important for you to see where am I investing and what am I trying to achieve. So in terms of your investment horizon, you're looking at, is it short-term, is it long-term, is it 1 year, is it medium-term? That entire conversation needs to be something that you're going to consider while investing. When you look at your liquidity needs, also those will inform which kind of fund you're investing in. So there are funds on the market. Again, when you go to the types of different money market or unit trust accounts on the market, we shall be looking at the different types of funds on the market and what they are supposed to do. So you need to look at your liquidity needs as an investor. Are you looking at cash flow? Are you looking at capital reservation? So when you understand what your liquidity needs are, you're then able to look at the fund you should be investing in terms of consideration. And of course, the most important factor of investing is your risk appetite. Everyone has so much that they can contain as risk. So some people are high risk tolerant, so those would be investing into unit trusts that invest into very high risk environment or very high risk or moderate risk investment assets. So those would also mean that they're going to get a slightly higher return compared to those that are investing into low risk investments. Then of course, the final advice is that you should be able to share your expectation with your investment or financial advisor in terms of your expected outcome. When you look at what you want to get at the end of the investment period, when you share that with your investment or financial advisor, they're able then to work out something for you. They're able then to work out something for you such that you're able to invest while knowing that at the end of the day, there's a goal that you'd love to achieve. So really looking at those different things that you need to consider from the myths that we have for CISs, what they are, what you need to look at when investing, what you need to look at when picking out a fund manager. I would love to say that we are going to continue this conversation further into the next episode, just looking at the different types of collective investment schemes that we have in the country, Uganda. Thank you so much. Until the next time, we shall be talking about the different types of collective investment schemes.